Creating a recast of a company's financials is one of the most important steps of preparing to sell a business. So, what is a recast? One of the many advantages of being a small business owner is the ability to manage the financials in a way that aligns with the owner's personal interests. There are many legal ways to reduce the taxable income of the business. For example, hiring family members, making charitable donations, and taking an above-market salary are a few common ones. While reducing the taxable income of the business is great when it comes to taxes, it poses a challenge when it comes to selling the business. After all, what are the true earnings of the business that a new owner should expect without those unnecessary expenses? This is where the recast comes in. By determining which expenses are discretionary or one-time in nature, and thus unnecessary for the next owner, they can be treated as what's called add-backs. To put it simply, the add-backs are the expenses the new owner wouldn't need to achieve the same performance. This includes personal expenses like club dues, cell phones, family travel, and many others, including charitable donations. It also includes any salaries that won't continue in the future, once the cost of a replacement employee, if needed, is taken into account, which can result in a negative add-back. It includes one-time non-recurring expenses, like an unusual lawsuit or the one-time implementation of a new software. It also includes above or below market rate rent paid to a sister entity, but it must take into account what the new owner will need to pay in rent in the future. So it can also result in a positive or negative add-back. And finally, it can include income or expense, but that is recurring and operational. With these add-backs, we are in no way passing judgment on them or if the IRS would agree. We're simply trying to ascertain how much actual cash the seller could pull out of the business. So, if the business made a charitable donation of $5,000 in 2021, the recast would still present it in the expenses of the business. But then below the net income from the profit and loss statement, it would be presented in the list of add-backs. Then, the sum of the add-backs in a given year would be added to the net income to determine what's called the seller's discretionary earnings, which will be used to determine the business valuation. And this is what makes the add-back so crucial. If the business is valued at 3 times earnings and there are $50,000 in add-backs, then the valuation is increased by $150,000 due to the add-backs alone. And this is also why they're so scrutinized by the buyers. If the owner says they're overpaid, but the buyer expects to hire 2 people to replace the owner's salary may not be treated as an add-back. Buyers should accept the presented add-backs if they're both credible and defensible. They want to see exactly where these expenses are in the profit and loss statement and agree that they're discretionary or non-recurring. They don't want to be told something like 50% of travel is personal without the concrete evidence to back that claim. If the add-backs are excessive in the buyer's point of view, they could see the seller as deceptive and question moving forward with the sale. On the other hand, if the add-backs are too modest, then the owner would be leaving money on the table in the sale of the business. So how can you make sure you get your add-backs and the recast right? Partner with a trusted advisor like our team at Raincatcher. Please click below or visit our website at raincatcher.com to connect with us and learn how we can help you. Thank you.